Hi friends, welcome to the accountancy class. Today, in this third module, we are going to learn how to calculate the amount of cash flow from financing activities. Cash flow statement is an additional information to users of financial statement. The statement exhibits the incoming and outgoing of cash. The statement assesses the capability of the enterprise to generate cash and utilize it. Cash flow statement is a tool for assessing the liquidity and solvency of the enterprise. The total expense of the company can be divided into three: operating activities, investing activities, and financing activities. Financing activities relate to issue of shares, issue of debentures, loan raised, redemption of debentures, loans, etc. These activities basically relates to change in capital and borrowing of the enterprise which affect flow of cash. Inflow of cash from financing activities will take place the following items. First one, issue of shares or increase in share capital. Second point is issue of debentures. Third point, increase in loan or mortgage or bonds or notes, etc. The important outflow of cash involves redemption of share capital, only meant for preference shares, or decrease in the share capital, repayment of or redemption of debentures, payment of or decrease in loan or mortgage, payment of interim or final dividend on equity or preference shares, payment of interest on long-term borrowings, payment of brokerage and underwriting commission, etc. Issue of shares, issue of debentures, then raising loan. These are the inflows of cash under financing activities. Then repayment of loan, then buyback of shares, then redemption of debentures or repayment of debentures, then payment of interim dividend, final dividend, proposed dividend, or any dividend paid, then payment of any other expenses, payment of brokerage, underwriting commission, payment of interest on debenture, payment on interest on bank loan. These are the important expenses or outflow of cash. Now we are going to analyze the transaction. First transaction is share capital. Share capital is a liability of the company. It comes under liability side. Then on the first year, that is year 2019, there is a balance of 10 lakh in share capital account. 10 lakh rupees in share capital account in the year 2019. During the year 2020, there is a balance of 12 lakhs. That means there is an increase in the balance of share capital with an amount of 2 lakh rupees. This 2 lakh rupees means there is a increase in the capital amount. The accounting treatment of share capital is we have to add that 2 lakh rupees under the heading financing activities. That term is known as cash proceeds from issue of shares. Second item is debenture. During the year 2019, there is a balance of 10 lakhs in debenture account. Then during the year 2020, there is a balance of 8 lakh. That 8 lakh amount during the year 2020. That means there is a reduction in the amount of debenture. Reduction in the amount of debenture means there is a repayment of debenture amount to debenture holders. So we have to credit that and deduct that amount while calculating cash flow from financing activities. Next item is bank loan. During the year 2019, there is a balance of 6 lakh in bank loan account. Then during the year 2020, there is a balance of 8 lakh. That means 2 lakh rupees increases. Increases means company take additional loan amount for running the business. If there is any increase in the liability during the second year means current year, we have to add that amount while calculating cash flow from financing activities. Suppose the first year balance is 6 lakh rupees. Second year balance is 4 lakh rupees. That means there is a decrease in the balance of bank loan. Decrease in the amount of bank loan or any liability means repayment. Company make the repayment of loan. Then that balance decreases. The accounting treatment of bank loan is when the amount decreases, we have to deduct that amount while calculating cash flow from financing activities. The next adjustment is suppose dividend paid or interim dividend paid, final dividend paid or any dividend paid given in the problem, we have to deduct that amount while calculating the cash flow from financing activities. Suppose this amount of dividend is given as an adjustment, that amount will come under two statements. First under operating activities, then second under financing activities. Now we are going to analyze the statement showing the calculation of cash flow from financing activities. First we want to enter the amount of proceeds from issue of shares, debentures, loans, etc. Then proceeds from long-term debts. Long-term debts means debenture or long-term loans. Then deduct repayment of long-term debts, redemption of debentures, redemption of preference shares. That means when the second year balance decreases, we have to deduct that amount, difference amount, while calculating cash flow from financing activities. If there is any amount of dividend paid, interest paid, any expenses paid relates to shares, debentures, loan, we have to deduct that amount while calculating cash flow from financing activities. These are the important steps to be followed while calculating or while preparing cash flow from financing activities statement.